Good afternoon, everybody. Welcome to our Short Verticals webcast. We get together every Thursday at this time to discuss short verticals. Over the last few weeks, we've been repeating a process and trying to kind of get our own recipe, so to speak, for short verticals. Well, one of those first steps is updating the watch list. So we're going to do that here today and walk you through that process. If it's something you want to do, great. You'll be able to have a watch list that you can start working with for your paper trades. I'm happy that you've joined me here today. Now, I hope you're following me on X. I'm Connie Hill, CS. We've got Brent Moores in the chat helping me out. Brent's a great veteran of the market and good friend and great golfer as well. In any case, as you have questions, chat those in. I'll keep an eye on the chat. Brent will help me out for anything maybe I can't quite get to. He'll get us covered there. Follow Brent on X as well. He is Brent Moores, CS. All right, let's go through our disclosures and we'll lay out our agenda here for today. Options carry a high level of risk and are not suitable for all investors. What we talk about is for education and information only, not a recommendation of any sort. For simplicity purposes, we won't take into consideration commissions or other transaction fees, but you will want to account for those. We will be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool if you're trying out strategies and trying to get sufficiently comfortable with them. Use your Paper Money account. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That is one thing that's different in your live account than your paper. Your paper account will not assign you early, so I don't want you to have a false sense of protection that would never happen, because it certainly could happen to you. All right. We'll talk a little bit about short verticals, what they are. Hopefully you come into this session with a little bit of understanding of what a short vertical is. Having gone through maybe the Getting Started with Options class, or even specifically the one about short verticals. We always want to talk about some trade management techniques. What are we going to do with these trades once we have them on? And of course, we're going to put in some example trades. Now, kind of at the beginning of this agenda, we are going to update our watch list. Now, there could be many of you here that saw us do the watch list. That was on the March 20th class. I said we'll be updating it in a few weeks just to have the latest, greatest on there. So we will be doing this. Now, this should be recorded and should be posted afterwards, hopefully in a timely manner. And it all depends on if I goof up or not. So I hope to not goof up. All right. Let's jump over here to our Thinkorswim to start out. And, when we're constructing a trade, we're going to look at a couple of trades we already have in here. When we're constructing verticals, we're typically going to sell a leg and buy another leg. If we're bullish, we're going to sell a put and then buy another put a little further out of the money. So say, for example, our Johnson & Johnson, which we need to look at anyway, we sold the 155 strike, we bought the 150 strike, and ended up with a credit here of 96 cents per contract, which is $96, and we did 3 contracts. That's a credit that went into our paper account immediately, okay? That's one reason some people do like credit spreads, is they like seeing that hopefully ending point or close to ending point of the trade go in their account right from the beginning. Now, it'll keep track. What is the value of that spread since we got into the trade? And right now, it's actually gone against us a little bit. We'll look at the chart here in a minute. But the value of that spread right now is 1.745. And ideally, we would want this number to be getting smaller rather than bigger, okay? We would love the 96 cents to shrink down to 20 cents, 15 cents, something, right? And have us say, let's go purchase that spread out, capture the majority of that credit that we got up front, move on our way to another trade. Now, sometimes things don't always go our way, all right? Sad but true, sometimes they just don't. Let's go take a look at this J&J chart here for a minute. Noting well, let's just jump over and look at J&J here. So on J&J, I'd like to mark when we get into the trade, what happened with the trade. So here, we looked at a trade and then we got out. So those are kind of a little bit old, I think. Here, let's check out the date we got into these. April 17th. So let's see here. If this is April 17th, okay, April 17th, this last trade that we're looking at here, this is when we got in. And we were looking basically for the stock to stay above that short strike price. And I like to write it out here, right at our 155. That's where we wanted it to stay above. When we got in, we were a little bit above that, and it's just kind of waffled a little bit. Now, as I look at this, I wouldn't say, oh man, that trade is just not going to work out for us. It's broken support or it's broken through resistance. In this case, it would be breaking support. It doesn't really look like that. And so we can be patient with this trade. We can give it the time because all we're doing is looking for it to stay above that level. Now, it can go a little bit below it like it is now. We can be down on the trade a little bit, but as long as we don't have a technical breakdown, our intent is to stay in the trade. And then we'd like to get out when we get a good chunk of that 96 cents. So we put an order on this. And let's go to our working orders and show you the one we have here. We've said if we can go buy that back at 19 cents, we brought in 96, we can go buy it back for 19. We want to be out of the trade. And so we've got our order sitting there to do that for us, should we want to. Now, some people don't feel comfortable putting on a stop order on a trade that they already have position sized and it has a hedge on it. Okay, some people don't feel comfortable doing that. And so in our class, we've kind of taken that approach. But if you're somebody that feels like you want to do that, not a problem at all. Just do like an OCO order, right? Get out at a profitable point like that 19 cents, or get out when the stock is a value you don't care for. Like if, say you brought in $1 credit and it's gone against you, that credit as well, gone from the credit to a 0 to maybe a minus 100, that might be a spot that some people might decide to get out. They might say, I don't want to take a max loss on it. But if I get to that point, that might be good enough to consider an exit. Okay, so hopefully that makes sense why we're going to just stay in this trade. Now let's look at real quickly Avgo. This is Broadcom. You're going to see it's in our bear short verticals bucket. Avgo actually has gone against us. Okay, Cisco's working in our favor. AVGO, we went ahead and bought back the short leg here. We've got 15 days before it expires, but it had a technical fall through. Okay, so if we come over here, pull up the ticker symbol, it looks like, oh yeah, this thing is not working out. We were getting in here just as it was kind of looking like it was bouncing down off of, I don't have moving averages on here, but it was bouncing off of a moving average. Looked like it was continuing this downtrend, but it didn't last for long, right? The very next day, it put in a higher low. So that was kind of a technical thing to pay attention to. I'm going to say it wasn't the overall kicker for that, but it obviously was not doing what we expected or wanted it to do. So higher low, a little bit higher move, but today its high went past these previous highs here. All right, so that is looking like a technical breakdown. So a decision was made. We went and bought back the short leg. I haven't updated the documentation here. We went back and bought that short leg, and we are long. We just kept the long call. Okay, so that's what we're seeing in our account now. Is we have 4 contracts of the 190 call, and you can see 0 on the 185 because that's the one we bought up or bought back. Now, is this a common thing to do? Hopefully not a common thing to do, but if you feel like, man, this leopard's changed its spots, then some people will say, okay, fine. we'll go by the callback the short callback at a loss, and we got to keep track of that loss, because then we need the long leg to move and make up that difference for us, or at least cut a lot of that loss out. Now, if you had, say, if we had 5 days left here, that might not be enough time to really pursue that. That might not be enough time to say, oh, 5 days, hurry and run up. But if we've got 2 weeks worth of time, we could see some significant activity in a couple of weeks that it might make doing that worthwhile. So once in a while, we have that opportunity to do what we call change of polarity, which basically means we were bearish and the stock has a technical move against us. And so we're basically jumping ship on that trade, but holding onto that long leg, hoping it'll make up the difference. Okay. Yeah, Isaiah says, it's forming a W pattern. Let's go look at that. What I actually was seeing here a little bit too as a possibility was an inverse head and shoulders pattern. Kind of like, say, a shoulder here, the head down here, and then kind of forming another shoulder. So I wouldn't really see it as a double bottom. Some of you might have thought of maybe a W pattern on a slant, but I kind of think it might have been an inverse head and shoulders pattern. So when we typically are looking for the stock to make a move above this midpoint, that's when some people that are technical traders might consider getting in a bullish trade based on this potential reversal pattern and kind of breaking through there to do that. Okay, so nice observation there. Let's go ahead and get rid of this. Any questions on that change of polarity on Avgo? Cisco, we're just going to let work. All right, it's not in bad shape at all. Oh, I got to type it in right. Cisco. We have a 60-62-50 short call vertical, and it's staying weak for us like we want it to, like we expected it to. Okay, looked like the day we got in, it was bouncing down off that resistance. This is kind of waffling around, which we are just happy as a clam to see it do, knowing that, okay, we just would love to have it stay below 60, and it's really in pretty good shape. So we're going to be patient. We're going to let it work. All right. That is a quick follow-up on our existing trades of short verticals. Now, let's get into our portion of reconstructing our watch list. And we're going to make a couple of modifications to what we did last time. So if you didn't see it last time, not a problem. If you're interested to go back and compare, the date we had that class was on the 30th of March. In fact, let's do this. Let's come over here and I'll show you where it is. If you are a subscriber, and I hope you are, and I didn't mean to do that, what you want to do is, let's go back here. You want to pull up the watch list for our class. So if you're a subscriber, man, it makes it so easy for you to find our content. But you could come over here to playlists, and then our short verticals playlist is down about 7 rows. So I just kind of scroll down about 7 rows, and then you can see our short verticals playlist. You can come back here and see tons of classes that we've done in the past. And the one that you'd be looking for is this one right here. It says how to create a short verticals watch list. Okay. And that's the one that you would look for there. Okay. One other thing I'm going to point out to you while we are on this page is we have a new section in our kind of our playlist area of our webcast called Shorts. And we're starting to do some short videos that are just a couple, 2-3 minutes long. We've got some out here right now that are talking about how do you identify a short-term trend, an intermediate trend, and a long-term trend. So if any of you are interested in that, we will be posting some more content in there. It's easy to consume. You can get through it pretty quickly. And Brent shared that watch list with you here as well. Okay, let's go back to Thinkorswim. Let's go build this watch list. We're going to come over here to the Scan tab. And I hit Reset up here so that we could just get a blank slate. And this is what Stock Hacker looks like when you first come into it, assuming you've reset it or you've never been into it before. If you've been into it and have done some things, it'll probably just have your last scan sitting there. So what we're going to do is we're going to say, what would we love to see in a watch list? We want stocks that have a lot of activity, lots of trading volume, which leads us to typically having a good size open interest. We would like to see the bid and ask spread be pretty narrow, right? Not taking out a big sliver, that the stock has to make a big move just to make up the spread. Man, we want that as tight as we can possibly have it. So we're going to kind of create a scan here based on that. All right. This scan that we're going to do is going to be able to be used for both bullish and bearish. In fact, we will be looking at some stocks that in the past we traded bearish that might now be bullish. And it could be vice versa as well. First thing we're going to do is look for a stock price. So we're going to change net change here to last. And we want these stocks to be at least $40. If we're going to use it for bearish purposes as well, we don't want the price of the stock to be too low because we would like there to still be some room to fall. So we're going to start it at a minimum of 40. Now the volume that comes here from the stock filter is today's volume, and we really want to see average volume. So what we're going to do is we're going to zap that field and zap the one below it. We're going to add a filter, a study filter. As a reminder, the study filter doesn't work in your paper account. So what you have to do is you have to build this on your live site. After you get your watch list, just share it and you can open it up on your paper money side. Okay. And here we're going to come down and we're going to look for average volume. And here we're going to do a shorter period of time. We're going to go over 20 days. And then here the default is 1 million. And what we did last time, and we're going to do this again, we are going to change that to 2,500,000. Okay. If you wanted 200,000 or 100,000, that's fine. We're really trying to narrow it so that hopefully everything that comes back is something we would be interested in trading that comes back on that watch list. All right. Next step is we are going to intersect this scan. We're going to do two different ones and combine them. We're going to do one with the NASDAQ 100, one with the S&P 500. Okay, we're going to start with, or not the S&P 500, the S&P 100. Might have said that wrong. All right, so let's grab that one first. So we're going to come down into the public watch list. We're just going to select S&P 100. And then as we filter it, then these two parameters are also in place. If there's something under 40, it's not going to show up. If there's something trading under 2.5 million over the last month or so, it's not going to show up. Now, somebody in here suggested this, and I really liked this suggestion of adding this extra piece to our scan. And that is doing another intersect with another public watch list called penny increment options. What is penny increment options about? Essentially, stocks that are their option prices are trading in penny increments as opposed to dime increments and 25-cent increments. That gives us the idea that there should be a lot of liquidity in there as well. Okay, let's go ahead. Let's run our scan. Let's change our results here to 200. Let's go ahead and just see how many come back here. All right, looks like 70. 70 meet that criteria. So hopefully we're seeing a lot of liquidity as we look down the list here. These are kind of household names, probably stock and ticker symbols that you have seen over and over again. They're like, you just know them. Yeah, absolutely. So what we're going to do, step one, we're going to save this 70 stock of 70 to a list. We're going to go ahead. We're going to say save as watch list. And I'm going to update this to, it's going to be called class short vertical. And then I'm going to put today's date, April 24th. Then we know when we created this, we'll kind of keep track of it if it's time to update it. And you might want to do that once every, 3 weeks or 4 weeks. In our case, it's going to be about 5 weeks between when we are doing this and the first one. Let's go ahead and hit save. And then we're going to go bring that watch list up over here. So it was called class short verticals 424. All right, so there is step one. Step 2 is we're going to change this and have it run over the NASDAQ 100. Okay, so I'm going to switch public watch list here to NASDAQ 100's right there. We'll keep the minimum 40. We'll keep the penny increment options. We're going to go ahead and run this scan. It looks like there's about 45. Okay, so between the two of them, a good number of stocks. Now you might be looking at this and going, oh, that looks like there's some duplicates. I saw NVIDIA on there before, and Tesla, and Palantir, and Amazon. And that's true. The process that we're going to follow here, as we're going to add these new stocks to the first watch list, and it'll get rid of the duplicates for us. Okay, we won't have duplicates sitting in this watch list that we end up with. Okay, how do we do it? It's a little bit different process. Okay, so I'm going to go a little bit slow on you, and let me. I'm going to bring Excel up because we're basically going to export it to an Excel file. Okay, we're going to come up here to the icon, just above the Sizzle index. Okay, so the icon over here. And then we're going to select Export. And we're going to select To File. Now, it has a spot that I tell it to go to. I want it to go to my Documents, Exports. Did this a little earlier here, and so it's just coming up with the same name, which is fine. I'm going to hit Save. And we're just going to replace it. Okay, so the name here is basically today's date watch list scanner is what it's calling it. Okay, so we're going to say, all right, happy to do that. And then it didn't do it properly. It's giving me an error message on my screen. We're going to do that one more time. What happened is I had the previous file open when I went through and did it the first time. So we're going to try it one more time. We said, okay, let's try it again. Export to file. And I'm going to put an X on here just so it doesn't have any issues. Okay, we'll make that its own unique name. And then we're going to pull this up. Just kind of show you that. We're going to save file, and then you go find where you saved it to. So it makes sense that you just kind of pay attention to that, okay? And we're going to say open, and it was over here, and it was under Documents, and then it was under Exports, okay? And so the one that we just did is this one that has the watch list date and the scanner with an X at the end. And then when this field comes up, we're basically saying, how do you want this formatted? What we're going to do is we're just going to choose here that we want it delimited, which basically means spaced out. And then we're going to say next. And it says, how do you want it spaced out? Choose comma. Comma means that it turns it into what's called a, what is that? It's a comma delimited file format. Okay, so just do, it's called CSV, but you do comma and then hit next and then hit finish, and it brings it over to the watch list. Now, there's only a little bit of information we really need off of here. We do not need these other columns. All we want to do is grab the ticker symbols. Okay, so I'll start at NVIDIA, and I'm going to page down. Oops, that was a page up. Page down so you just get all the ticker symbols. This point, we're going to do a Control-C. You could do an edit copy. The idea is we're putting it into the computer short-term memory. Okay, so that whole little list here that we just highlighted is now in the computer's short-term memory. Now what we're going to do is we're going to come over here to our watch list. Okay, the class SV424, and we're going to say import. And then it's going to say, okay, what do you want to import? We are going to choose this paste symbols from clipboard. Okay, does that look familiar? NVIDIA, Palantir, Tesla, Amazon, yeah, those are exactly that list of stocks. And then right down here, we can either say replace these symbols in the watch list. We want to just add them. Okay, anything that's new that's not already on there, we want to add. And so we're going to say add to, we're going to say, okay. And now we have our watch list. Okay. I'm not allowed to share the watch list with you, but I wanted you to see how that was created. And let's see here. I'm not sure what it's doing. Besides being frozen, I don't know why it's frozen here. And it didn't freeze on me when I did this earlier, making sure it worked. And I'm just going to I didn't see it flash, so I don't know that it updated the list. Let me do this. I'm going to just sort it alphabetically. And I want to see if something like, looking for something specific that might not be on both lists. Let me see if PDD is on this list already. Okay, it looks like it is. How about MDB? Mongo database. Okay, Mongo database is over here. Well, you shouldn't have an error message. I shouldn't have an error message. Just not behaving right now. In any case, that's the process, okay? I'm going to go ahead and hit cancel. Well, it is just not liking anything I do. Let me see here if I've got it like a hidden message that maybe is on my other screen. That maybe it's wanting me to ask a question or something. And I'm not seeing anything like that. So what we're going to have to do, unfortunately, is we're going to have to kill it. Okay, we have our watch list. It'll save this. We've already got that in place. It just is frozen. So let me kill my Thinkorswim for a moment, okay? So hang tight while I do this. And we'll just kill it. We'll reopen it and come back in here. So I'm actually going to stop my sharing here for just a moment, okay, guys, while I take care of this. And we're going to end the task on Thinkorswim. And I'm just going to bring it right back up. And then we've got a watch list. We can use this watch list and go back to it. And I'm going to suggest you could use it for pretty much any option strategy that you wanted. Does it have to be only a short verticals list? Heavens no. I think it would be pretty much any option strategy that you trade or like to trade, you could be able to use this list. Okay, let me go ahead and get logged in here. And I am going to drag it over here and we'll watch it open up here together. Get that out of the way. All right, I think it's loading here. Today's been a day with a few hiccups here and there. All right, it's loading to my other screen. Let's see if it comes over where it's supposed to be. Okay, looks like it did. So let's change our watch list. Let's come back here. We're going to grab our personal class. And let me share my screen with you guys again now that I've got that back up. There we go. All right, you should be with me now. Let's move that out of the way. So, like crap, that's not the right list. We want class SV424. All right, there's our stocks. All right, and not sure why it had a little hiccup on that import. Usually it works slick. Okay, works really good. If you're trying to follow along with me, yours probably worked just fine. All right, so we've got our watch list. That's kind of been one of our first steps. Next is, well, do we want to be bullish or bearish on the market? Do we want to look, which kind of trades do we want to be looking for? Now, for the last few weeks, we've pretty been doing what? We've been kind of following these bearish signals. And let me, I hid these earlier, so let me just hide these again so it's not quite so busy here. And we'll just look at the price action here. We had been below the 200-day moving average, and it bottomed out, rallied up, kind of made an ish equal high. And then 2-3 days ago, what did it do? It put in a higher low. Okay. So that is something to watch as a potential first step to trend transitioning back to bullish. Ran up here again, almost to the same high point here. Some people might call it equal highs. Is pulling back, and today bounced off this Fibonacci level of this 61.8. It hasn't yet made a higher high, but maybe it will by the end of the day. Maybe it will as going forward this week. We'll just have to see. If it hits its head and comes back down, then I'm going to say some people might be on the little bit more bearish of a train. But if it comes up here in the next couple of days and forms a higher high, those people that say, okay, that's all I need to see, that's enough evidence for me to feel like I can go bullish on it. Okay. Now I think there may be a question out here. I need to align a couple of things a little bit better here. And that did not go better. Let's try this again. There we go. All right. So from this watch list, what did I do? I started looking, and actually I kind of had on my bullish hat with the idea that, we have a lot of stocks that sold off, but they have had higher highs and higher lows. They have turned the corner. Okay. Which ones are they that I'm talking about? Well, let's take a look at the first one we're going to use here, which is CrowdStrike. Okay, CrowdStrike, this is just a 3-month chart here, but it has some what I'm going to call pretty price patterns, kind of some ideal look that we might look for. Somebody mentioned earlier a W pattern. Now tell me, does that look like a W to you? Yeah, it's W for, I was going to say winner, but we don't know that it's a winner. But basically, it had a double bottom here. And then this midpoint here is what we look for the stock to go through. Somebody that maybe has been bearish on it and is looking for that reversal and likes to see that. The break of that midpoint line is what signals an entry. Now, it's actually gone quite a bit further than it did when I first laid eyes on it. So we'll have to see if the strikes I'm looking at look good. So for some technical traders, they would feel comfortable getting into it. If you want more evidence, if there's other things you like to see on your charts, maybe you have some studies, maybe you have certain moving averages, obviously that can filter into there as well. But really what I'm looking at here are either a support bounce, a close above the high of the low day, a moving average bounce, or this last one, a resistance breakout or breakout of a price pattern. Okay, so that is the one that we're going to base this off of. Let's go ahead. Let's look at the option chain here. Somebody's saying, what's driving the market up today? Tweet or something like that. To be honest with you, I have been so busy, I have not monitored the news today. Okay. I'm going to guess that it's news driven. Yesterday, there were, the White House will say certain things and the market has been reacting very strongly to what has been said. So yesterday afternoon, and this could be why we're having some follow through with it today, was that maybe we were not going to be quite as aggressive on tariffs against China. Who knows? We'll see. The rules keep changing about every other day, seems like. All right. So since we have a bullish stock, market is going bullishly, we're going to ride that wave. Okay. We probably wouldn't want to pick a downward trending stock that hadn't started to recover, right? That would be a very aggressive trade. You'd be going counter trend. And it's typically easier on our trades if we're following what the dominant trend is. All right. How much time? Well, we've got some weeklies. Generally speaking, a window anywhere from 20 to 40 days, 20 to 50 days is what a lot of traders will look for. We are going to use these May 16th. We're at the short end of that window now. We're at 22 days. We're going to be looking on the put side because a short put vertical is a bullish. bullish signal here. Now the strikes I was thinking of using, and we'll see if this still works out appropriately, was 390 and 380. We got some good open interest here. 390, that's some decent open interest. These ones in between here, maybe not so much. So we're going to spread it out by $10 so that we can come up here to the 380, okay, and have some decent open interest here. All right, let's go ahead. Let's say sell vertical. And then we're going to have to come in here and change this to our 380. All right, there's our $10 wide spread. Oh, look how nice that's sitting there at 252. I'm going to lock that in place. So 252 would be our max gain per series of contracts that we do. What would be our max loss? Our max loss would be $10 minus 252. That's going to be what, like 748? I'm going to write those two numbers down here. 252, 7.48. And if I didn't do the math in my head correctly, but I think I did, go ahead and correct me. All right. Why would we risk more? Why would we risk 748 to make 252? We're risking more than what we have to gain. The reason a trader might do that is because of the high probability of that trade. This column here is my probability OTM, or probability of expiring out of the money. Okay. Some traders will look for 60 or higher and feel like if that's high enough, and they may go from there. You may have a different number. Maybe you like 70%. If you like 70%, then you might have to use some strikes a little further out of the money, right? Maybe a little bit lower delta so that you can have the probability that you're looking for. So it will vary from trader to trader, but in here, typically we'll look for 60%. Now, as far as how many contracts we're going to do, we will let ourselves risk $1,500 per trade in this class. We do 1% of our $150,000 account, which is clear up here in my notes. Okay, that's what we're willing to risk. So we're going to do 2 contracts, right? If we lost everything on it, it would be close to that 1,500, but it would be okay. All right, so found an entry, looked at the strike prices we might want to use, and we're going to run a number here to see what the return would be, okay? Just to make sure that we're satisfied with it. So we're going to take our max gain, 252, divide it by our max loss. Let me get rid of that here. That was 748. So we'll say divided by 748. That's going to give us, that's not right, a 13%. I think let's try that again. 2.52 divided by 7.48. There we go, 33%. I must have had an old number stuck in that calculator. Now, some people may like that. Some people might have a straight number. They're like, as long as it's this number or higher, I'm good. There might be other people that look at it and say, well, as long as I can get a % per number of days left, then they would be satisfied. In this case, that would be like 22%. Okay, but it clearly meets that criteria as well. Now, I think something that's been very beneficial for us is to decide when we're out of the trade. We decide that as soon as we get in. In our case, we're saying when we get a chunk of the gain, we're going to be happy campers. We're not going to look for all the meat on the bone. We're just looking for most of it. If we leave a few scraps on the bone, that's okay. All right. That's kind of been our approach. So let's do a first trigger sequential. Let's do create an opposite order. And do any of you, I want you to answer this to yourself. Do you have a percentage that you're starting to get comfortable with? Do you have a percentage you're starting to get comfortable with? I'd love you to chat it in. This will give you guys some opportunity to maybe exchange an idea a little bit. Some people might use 50%. Some people might use 60 or 70 or 80 or 90. Or those same ones in decimals or in increments of 5. Okay. Frequently, we'll do 70%. Let's do 75 today, okay? Just to mix things up a bit. If we have 75% of our 252, what is left? Okay, so 2.52 times 0.25 means we'd have about 63 cents left. So we'd say, all right, we are willing to go buy this back at 63 cents and plug that in. And then we're going to make it a good till canceled. Now, one thing with when these come up as pennies, this intersected with penny increment options. Sometimes we might not see pennies in like 2 cents or 7 cents or something like that indicated here. And so sometimes that can mean that maybe it's only trading in nickel increments. And so you might say, well, then if I can get, you know, in this case, maybe we change it to 65, right? Just so that we're getting that nickel increment. Okay. Thea says, you know, what should be strategy? There'd be the strategy for vegetarians who do not eat meat from the bone. See, what was this? When you get the lion's share, when you get most of the toothpaste out of your toothpaste container, okay, a good chunk of it. I squeeze every little last spot of toothpaste out, but it's not usually, I should say, some people don't like to trade their verticals that way. They're like, hey, I got most of the toothpaste. My teeth are clean. I'm happy. No cavities. All right. We're going to go ahead. We're going to send this in. We're going to put it in our bullish short vertical bucket. I want to show you maybe a couple of more setups. And after our class is over, I'm going to go put these in our account, our class account. All right. A couple off this list. One, I was hoping to get to a Zscaler. A Zscaler kind of looks like similar story. Bottomed out. It's been forming what? Higher highs and higher lows. Looks like today maybe it is breaking above kind of some short-term resistance here. So that's one I'm planning. And if I run the strike prices and they don't seem to match out great, then I will adjust. But my plan is to do the 200, 195. Okay, so looking for it to stay above 200, which is there. That gives us about $12 of leeway from where the stock is right now. And then our 185 would be our hedge leg there. The other one we're going to put in class account is PanW. Now, we've actually been playing some of these to the bearish side, okay? Since we're seeing some kind of shifting of momentum, we're just going to still use those same stocks, okay? What have we got going on here? Probably something very similar, right? We have kind of some bottoming out here. We have a high. We have a slightly higher high. And actually, it made a higher low here, a higher low here. Today, it looks like maybe it's breaking kind of above that short-term resistance. I kind of like where this 172 line is. Looks like it's breaking beyond that. I'm going to say considerably here today. Okay. So on that, what I'm going to put into our paper money account that we're going to track, we are looking to do the 200, 195 put spread. Again, in the month of May is the one that we're going to be using there. Okay. So you'll know what my plan is, and then we will have a chance to follow up. Vic says, oh, those are all cybersecurity companies. Yeah, cybersecurity is still a big deal, isn't it? Absolutely. You could do a different sector, Frankie. Absolutely, you could do that. I just went with the ones that kind of showed up first on the list, and they looked like they had a technical setup. So that's why we went with those. All right. So I did not see a survey out there today. You guys are always great at filling out the survey. But what I'd encourage you to do, if you found this helpful today, go ahead and give us a thumbs up. That lets us know and other people that you found this useful, and it helps others find it here as well. Okay. Follow Brent and I on X. Love to have you follow along those little nuggets that we throw out. And of course, if you haven't become a subscriber, subscribe. Now, my biggest one is, my request of you is paper trade a short vertical, or I'd like you to do 3 in your paper trading account. Okay. Those of you that are trying to just really kind of finesse how you want to trade things, what you're looking for, what your entries look for, and just that process of management getting out when we have a majority of gains, or if we have a technical breakdown, getting out on that side. All right, you guys, appreciate Brent. Thank you for helping out today with the chat questions, and thanks to each of you for being here. Next up is going to be Kevin with getting started with stock investing. So those of you that need something a little bit ratcheted back, that'll be a great class for you. We'll see you next week. Bye-bye.